Let's talk about scalping. Everyone wants the perfect scalping strategy. And here's the truth. Scalping isn't about staring at a 5-minute chart all day. It's about having a system that tells you when the market is ready and when it's just noise. That's what I'm going to show you in this video. The exact 2-step simple 5-minute scalping formula I use across crypto, forex, and indices. It's simple, it's repeatable, and once you get this, you'll never look at the charts the same way again. Now, before we dive in, the full system and the tool I use to execute this is linked below. Click it now if you want to follow along. All right, let's break this down. Step number 1, higher time frame bias and key level. This is where most traders fail and why they lose. You don't just open a 5-minute chart and start trading. You start with higher time frame directional bias. Ask yourself, is the market in continuation? Is it in reversal? Or is it in indecision? For this, I always check the daily, 4-hour and 1-hour candles. I'm looking for structure breaks, liquidity sweeps, and displacement. Once I have that, I map my key levels. That could be the previous day high or low, previous week levels, or a clean fair value gap. This gives me the where, the exact spot I want to trade into. Without this step, you're just scalping noise. And step number 2, the CISD entry. This is where it all comes together. When price reaches my key level, I'm not just hitting buy or sell. I'm waiting for a failure to displace pattern, a sweep to form on the 4-hour or 1-hour time frame. Here's how it plays out. Price comes into a key level and manipulates the sweep. Traders get trapped, liquidity gets taken. Then the 5-minute CISD is formed. That's my trigger. Once price breaks the CISD, that's your entry. The moment I see displacement break the CISD, I drop to the 5-minute, set my stop behind the sweep, and target the next clean liquidity level. That's the entry. That's the edge. And that's why it works. So let us jump onto the charts and I'll show you exactly how it looks in real time. All right, we're on the charts and I'm looking at a cryptocurrency coin called Aster USDT, but keep in mind this strategy works exactly the same no matter what asset class you're trading. So as I came to the chart here, I noticed price had making a breakage structure to the upside, which is showing strength in this asset. And then the asset had retraced back down. So what I first do is I always mark out the key levels. You always want to mark out the higher time frame key levels. And I noticed a 4-hour fair value gap. For this strategy, we're going to focus on using the 4-hour, the 1-hour, and the 5-minute to take our entries. So what I did is I always mark out the higher time frame key levels. So I'm using a 4-hour fair value gap that I've marked out and noticing price is retracing back into this 4-hour fair value gap. So this is our key level. This is the location where we want to look for our entry setup. So then we jump onto the 1-hour time frame to have a better look. You can see here we're on the 1-hour time frame. And also notice we have the SMC X Indicator open, which helps us to be able to look at the higher time frame candles at the same time at the lower time frame candles. Right now, the higher time frame candle is the daily, and this is the 1-hour. So what it's doing is it's finding all the sweeps, the CISDs linked to the daily, and then it's projecting them onto the hourly chart. So first thing we want to wait for is we want to wait for a sweep to occur at a key level. So let us wait. There you go. So you can see now, look, we got our daily sweep occur at our 4-hour fair value gap, and it's printed the CISD levels onto the chart. So look how simple this is. This is all you want to focus on, price coming to a key level, a sweep occurring at that key level, because price always reverses from a swing point. A swing has to occur before price to reverse. So we want to see a swing point occurring at a key level, and then we're using our CISD as confirmation. As price breaks the CISD, that is going to be our confirmation. So then we jump onto the 5-minute. Now that we're on the 5-minute chart, what I've done is I've set the SMC indicator to project the 5-minute and the 4-hour. So it's showing us the 4-hour higher time frame candles and projecting all the key levels from here onto the 5-minute chart. so we can trade in alignment with the higher time frame. And then you can see price has already broken the first CISD level, which would have been an entry. But you can see price created a fair value gap after it broke the CISD and then retraced back into that fair value gap. So this is precisely where we can look to take an entry. We can look to take an entry at this fair value gap, and then we set our stop loss below the lows. So the reason I like to set my stop loss below these lows is because if in fact this is the true sweep, price will not come below these levels. And then the indicator marks out the most relevant liquidity areas. So these liquidity areas are projected onto the chart and it's showing you the most likely places to take profit. So I'm going to set it at this low, and this is my setup, guys. So now let's play this out. Sometimes we do get a bit of reversal. You can see price broke the next CISD level, which is looking good. Okay, then price is reversing back down a little bit. This is very common if price breaks the CISD level. Then notice we got another CISD level. So if you'd missed the first one, you'd have an opportunity to enter at the break of the second one. Remember, you always want to see price break and close above the CISD, and then we'll target the same regions. Okay, let's play this out. Boom. Okay, there you go. Hit our target. So can you see how simple this strategy is? Here's another example, and this is going to be our short trade. So you can notice price has pumped quite a lot, and I love to find tokens that have made extremely high movements. This token moved a lot throughout the last few days, and now it's reaching a critical point. What I've done here is I've marked out the highs. You can see the swing high points. And these are the areas where you also like to look for potential entries. Swing highs, swing lows, fair value gaps, that kind of thing. So price is coming into a swing high point. So this is where we want to pay attention and look for an entry. So now I'm going to drop to the 1 hour chart to just get a closer look. And you can see we can't see too much on the 1 hour chart over here. But let's see, we want to wait to see a sweep occur. So now look what we've noticed. Can you see prices hit the key level? And we get a reaction off of it. So trading is all about observation and reaction. We want to see how is price reacting when it hits a key level. And since we got this massive buy to sell candle, this is showing us a clue that something is happening in the market. So let's have a closer look and jump to our 5-minute time frame. Here we are on the 5-minute time frame, and I just want to quickly set the indicator to focus on bearish moves. So it's going to focus now on marking out all the bearish scenarios. So you can see here we go. This is absolutely perfect. See, prices hit our key level, which is the first step, and then we get a sweep occurring on the higher time frame. You see this big swing point. When we get this big swing like this big reversal, this big rejection, this is showing us high probability price is going to reverse against us. This is a good sign. So then you can also notice the CISDs have been produced, showing us when price breaks these CISDs, this is where you want to look for an entry. As I've explained in many of my previous videos, you can actually enter the short at the break of the CISD, break and close. So you can see this would have been the break and close the first round. That is one option. Or you can mark out the fair value gap that was created before the break. So you can see we've got a fair value gap over here, and we got a fair value gap over here. So these are potential areas where we want to look for an entry. Either price is going to retrace into these fair value gaps, or they're just going to drop. So what I like to do is you can either enter on the break of the CISD, put your stop loss above the swing point. However, this is going to be quite a big stop loss. So maybe you want to wait for price to come back into the fair value gap. So every setup will be a little bit different. You'll get different R&R depending on how the setup plays out. It's never going to play out exactly the same, but we must just trade according to what we see in the market. So now I'm just waiting for price to come into the fair value gap. Usually when price creates this displacement to the downside and it breaks the CISD, there's a high probability price is going to reverse back to the fair value gap. And that's going to be a very high probability entry point. So see price come back into the fair value gap. There you go. So you can see we're getting a little bit of rejection off of this fair value gap. What we can do is we can enter exactly at the fair value gap where we start getting the rejection. Stop loss comes above the swing high points. And then where do we want to target? We can target these liquidity lows. Remember, the indicator marks out the most relevant liquidity points. So this is our setup in play. Let's play it out and see how it goes. Might have had to wait for a long time for this one to play out, but patience is the name of the game. The more patient you are as a trader, the more successful you will become. So price is going down, 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 and boom. So there you go, guys. This was a gigantic trade, and there's many other ways we could have taken this trade. There were many continuation entries. You can see as it broke these lows, we always like to mark out the opposing levels. So I go very deeply into the opposing levels in my course, and opposing levels are fantastic places to look for re-entries. You can see we've got another opposing break over here, another opposing break over here, and another opposing break over here. So there were multiple re-entries. You know, I like to talk about the reversal entry, but then there's also the continuation entry, which we go into a lot of detail. All right, let's look at another example. So here we are on the charts. Price has made a big move to the upside. I'm on the 4-hour time frame right now, and you can see price has made a big move to the upside. So now we're just looking for a retracement, and I'm usually looking for retracements at fair value gaps or key levels. You can see we've got two fair value gaps over here, this one, and we're going to see what's going to happen. So we just want to see how does price react when it comes to these key levels. So I've marked out the fair value gaps on the 4-hour. Now I'm just going to jump to the 1-hour to look for more details. And now I'm just observing, are there sweeps occurring at the key level? I don't see any sweep occurring at this key level. Well, now I do. So first I want to set the indicator to bullish because now I'm looking for a bullish move. And there you go. Look at that. So we can see a sweep occurring at a key level. Pretty much come very close down to the second fair value gap. We get a sweep occurring, and then we get the break of the structure. So now I'm going to jump onto the 5-minute time frame to look for a precise entry. And you can see, here we go. Price has come down into this fair value gap, and you can see it's just touched the fair value gap. Sometimes price will come into the fair value gap. Sometimes it will just touch the fair value gap. Sometimes it'll come to the end of it. This is the general region we want to look for. So you can see in this example, we've got the 4-hour candles showing us a sweep. Look, a sweep's occurring at our key level. We've got a CISD that's being produced. Price has broken the CISD. This is showing us precisely a good place to look for entry. Also notice we get displacement being created. If price breaks the CISD with displacement, that's a very strong sign that we can look for an entry. So this would be your entry point right here. You can either enter when price breaks, or you can wait. Usually there's a bit of a retracement. You can see price will retrace a little bit. We can look for our entry on the retracement, or there's the opposing level break, which is over here, which becomes a continuation entry. If price breaks that level, that can also be a great entry point. And then where do we want to look to take targets? You can see we've got no liquidity lines being produced in this example. So I often like to just look to take profits at previous fair value gaps. You can see this was a fair value gap that was created over here in this example. You can see we're going to set stop loss just below the lows, and it looks like it's a 1 to 2 or just a 1 to 1.5 R&R. So let's play this out. And there you go. Price hits our target and we are done for the day. Now you might be thinking, okay, this sounds great, but how do I track bias, levels, liquidity lines, and CISD entries in real time without missing trades? That's exactly why I built the SMC X Indicator. It literally shows higher time frame bias and structure, automatic sweeps, CISD levels marked live, liquidity lines for entries and exits, and weekly, daily, and 4-hour market opens for context. So instead of staring at charts, second guessing, I get clear setups with everything mapped out automatically. There's a link below where you can try it out for yourself. And in the next video, I'm going to show you a powerful confluence to increase the win rate of your trades. This one shift could completely change the way you trade. And when combined with SMCX, it's like dynamite for your trading. Click the link now. Let's dive right into it.